Hey guys, welcome to Agura Capital. And in today's video, I'm going to be talking about a tool, which is the DXY chart that we can use to trade gold and other currencies as well, right? So here is just the brief on it. If the DXY is up, means that the dollar is getting stronger. If the dollar is getting stronger, gold will fall, because investors and people in general, they want uh, the stronger currency, right? And if the dollar is pushing down, the US dollar is going to go weak and the gold will often rise. So every time that we look at it and use it as a tool, it's just for us to gather the information and combine with all the technical analysis that we do with gold, and then gather all of that information and then make a decision, just so that the odds on that decision are in our favor and our risk is calculated, how much we can lose and how much we're going to make, right? So right here is just an example. If we look at it, we have these couple zones that I drew in the chart, and let's just say price of the DXY is reaching this area right here. So whenever we have reached this area, the DXY is pushing down, right? It's getting weaker, it's getting weaker. So every time it's getting weaker, gold is rising, right? And the opposite is also true, right? Every time it's getting stronger, every time we are at highs, like right here, like where we are right now, the USD gets stronger and gold eventually falls. So if we are betting buys on gold, so let's just say gold buys, I really want to see the DXY going in sell, so in a downtrend, right? So buys will be uptrend, and then the sells on the DXY will be the downtrend, right? So this is a tool, right? I really want to see if the dollar, the DXY pushes higher all the way down to the hundreds, because every time we were at the hundreds right here, we had a massive retracement to the downside, right? This here pushed. So mostly every time that we pushed higher on the DXY, we had the DXY got stronger, and so gold fell. And then after that, if gold falls, it's one of the best opportunities to buy. And the best opportunity to buy means that we're going to reverse. Like right here, we had this push down right here, right? Make this. And then every time like this that we can see, we cleared the whole chart, right? And if you go back in time and look at the history of the chart, and look at the history of the tops of the DXY and the bottoms of the DXY to the tops and bottoms of the gold, we're going to see a pattern, right? And so this is just a tool for us to use to trade as well. So to use it as an example, let's check the date and confirm. This is around April 2026 and end of April, mid-April to beginning of May. So end of April. It was right here, exactly. So once we were down on the DXY, we were topping on the gold, right? So we were weak on the DXY and we were strong on gold. We were strong on gold, weak on the DXY, right? And there's many other examples that we can use. But again, we are very weak. No, we were strong on gold, yeah. So we are now weak on gold and DXY is getting stronger, right? So we can use this in our favor, right? Gold is down, gold falls, DXY getting stronger. DXY gets stronger, gold falls more, DXY gets weaker, gold rises. All right. So quick video just to show you guys something that I've been using. All right. So and another thing, this is not for you guys to be trading at the 5-minute, 15-minute time frame. It's more an understanding of where we are, right? Where we are in the calendar, where we are in the time frame that we're in, right? Thank you guys for watching. I'll see you guys on the next one.